If you go to the gold section and look at premiums, J.M. Boyden's consistently lowest premiums above spot on gold and silver on that chart over time. And he's graphed out this over time, many, many years. And he graphs out, he scrapes and pulls prices from a lot of the dealers. Hey everybody, this is Rob Kientz of GoldSilverPros.com coming to you on behalf of J.M. Boyden, doing a very special video announcement for you. We're going to be talking about gold heading into summer. This is something I promised we would cover on the weekly market wrap-up. If you have not seen that weekly market wrap-up on the J.M. Boyden channel, please go ahead and take a look out for that. This is being recorded on June 2nd, so all prices will reflect that date. Please note that. I'm going to bring up a price of the gold chart. I'm going to show you where there's a really big potential bearish technical indicator. We're going to talk about the fundamentals and where gold may go. This is going to be a little bit of preview of gold heading into the summer. Then I'm going to show you a couple of my new favorite pieces from J.M. Boyden that are silver, which I absolutely love, which you can find on their store. You guys are really going to enjoy looking at that shiny. I always do. All right, getting to the chart. This is the one that I wanted to graph out for you guys. So as you can see, this is COMEX gold. And in the middle is the actual chart. And then top and bottom, the squiggly lines are a couple of indicators, technical indicators. We'll go over those in just a moment. But let's look at the middle section right here and look at the gold chart really quickly. And let's see where we could have this bearish indicator. So I've marked out on the chart, you can see at the top, this green line, 3 tops, top 1, top 2, and top 3. Now, these 3 tops are indicating, or they're forming a technical pattern that's called a triple top. A triple top is typically a pattern in which price hits a specific point or close to a specific point, especially if it's a significant point like a new all-time high or something along those lines, or challenging, a recent high or challenging something of importance. Tests it 3 times, and typically the 4th time it's just going to fall back and go into a bear market. It's an indication that people don't want the asset as much. And so while there was some excitement, the bears win. They go bearish, and typically this happens a lot in stock markets, but you can apply this to any market. You could look at bonds with it. You could look at housing prices because it's human behavior, and human behavior is very similar across markets. A lot of times you can draw conclusions. Now, that in itself would be concerning. I've drawn out also the support lines. The support lines are used for confirmation, meaning just because we have a triple top forming, it has not fully formed. We have not had the confirmation of the price falling back down through this common support line formed by graphing out the previous lows. So the previous highs are the tops, the previous lows are the support line. If it hits 3 tops and comes back down through the support line, it's tested resistance here, it's gone back down through support and stayed there, that's a confirmation of the bull market, meaning the triple top was correct. We don't know if the triple top's correct until we cross that line. So this doesn't mean we're going to go bearish in gold over the next few months. It just means that there are some technical indicators that this could happen. Now, and the last one is declining volume. So you see the volume has declined a little bit. It means that when people were bidding up gold at a little bit higher volume, and then it faded and faded and faded a little bit, and the price hasn't reached a new high, and we've had declining volume, which indicates a softness in the market. Now, this could be happening because we're heading into summer. Summer is typically very soft for gold and silver. It's typically very soft for a lot of the financial markets because people sell in May and go away. A lot of people take their summer vacation. For example, I'm actually calling some of my friends in finance and like, oh yeah, I'm on holiday. They all take it during the summertime because the markets aren't as frothy and there's not as much action going on. So you can see some softness in asset prices, especially gold and silver. The typical pattern is that during the fall, gold and silver will start to resume. People get back into the financial markets. You also have the love trade overseas, where a lot of physical gold and even physical silver is used in ceremonies in India and China and places like that. And then the best months generally tend to be around the winter months until late spring. And that's the typical cycle, although we have seen breaks in that cycle. We saw a break during the pandemic year 2020. Gold and silver continued to rise in the summer because we had reason for them to. So where we have reason for gold and silver to rise, they will rise. It doesn't matter what time of year we have. And given the fact we've had problems in the banking system, debt ceiling issues, all sorts of issues around the world, negative economic data and softening economic data, high inflation, stuff like that, I think this summer could be different. I don't think we'll necessarily hit a low. But if we hit 1,700, that's a confirmation of a bear market in gold, which would surprise a lot of us. But it could happen if you're looking at the chart. Some counter indicators, things that make me think that this is not a real bearish technical pattern that's going to come true, are the 2 indicators. You get the RSI graphed over 14 periods and the MACD 26 and 12. RSI is a little bit longer term indicator because the periods are longer. This is a daily. You can see it's oversold, meaning the market says you've sold too much paper and gold. Ladies and gentlemen, we had all this momentum and you've oversold it. That oversold indicator is occurring at mid 1900 gold. It's not occurring at 1700. This tells me that the market wants to continue to go higher like this. They're saying, no, continue to take it higher. Some of this, I think, is a result of people believing that the government solved the banking problems along with us heading into summer. I believe those are false indicators. I believe we're going to continue to have banking issues. Why? Well, I've talked about this week how almost $1 trillion, I think it's $880 billion. I talked about this yesterday on my program. $880 billion have come out of the US banking system in the last year. 880, that's almost $1 trillion. Of the total money created, over 18 trillion electronic and paper. I mean, that's almost 1/20th of it. It's almost 5% in the last year. And we've only, we've had a couple of bank failures, but we hadn't got into a serious event like a Lehman or a major recession. So people are already starting to pull out their cash from the banking system. People are already starting to put that into other investments, some money markets, but a lot of it's going into gold and silver, Bitcoin, things like that. So people are moving away from cash to other assets. So I think you can see that people are repositioning over the summer and over the spring here for what they expect to be conditions, which would indicate further economic deterioration, therefore a bigger bull market in gold and silver and the precious metals, because those are contrarian investments to the rest of the investment stocks and bonds. So for all those reasons, I think that this market's not going to crash down through 1700. The technical indicators are saying we're going to stop somewhere around here and probably reverse and maybe sideways trade a bit during the summer. We could have a nice pullback, but given the chance for more negative news on the economy or geopolitical news with regards to like Russia, Ukraine, or other things like that, I suspect that we're not going to crash down to 1700. But we could see some weakness. Don't be surprised if that happens. It could happen. It's entirely possible. I'm just not expecting it to happen. And we'll continue to watch that as time goes on. Now, what's super important, what I love is the shiny, ladies and gentlemen. I've got 2 new pieces of shiny that J.M. Bullion has graciously provided to me, and I want to talk about them. They're both from Silvertown, which is a private mint. It's a good and well-respected mint. Lots of people sell these. They have an established mint mark, as you can see right here on the back of this coin, which is a man, a pack horse, and the Silvertown. That's their logo, and how you know this is a Silvertown ounce. Of course, they put 1 ounce on it, fine silver. And on the front, you get their typical logo. So this is the logo design for Silvertown. Trying to get out of the picture there. There we go. There we go. And we also have a second one, which has a nice Silvertown logo on the back. That's their mint mark, so you know it's theirs. And on the front, you get a nice little eagle, who's going to jump down and maybe catch the worm on the branch there. Nice classical design by Silvertown. Beautiful bars. If you're looking to get in silver, you can get either one of these bars, 1 ounces. For the price of silver plus the premium. J.M. Bullion is usually pretty decent on their premium. They come across as usually being one of the best premium outlets, I should say. A friend of mine runs a fintech, and he's got a website called exploringfinance.shinyapps.io, I believe. You can, if you look for Exploring Finance in Google, you'll find it. If you go to the gold section and look at premiums, J.M. Bullion's consistently lowest premiums above spot on gold and silver on that chart over time. And he's graphed out this over time, many, many years. And he graphs out, he scrapes and pulls prices from a lot of the dealers. So J.M. Bullion, does have low premiums. They have beautiful bars. And I love them because they're here in Dallas and I visit them. Great company. So if you guys are interested, take a look at those Silvertown 1 ounce bars. If you're just looking to get into silver and gold, you're not sure what you want to do, probably at that point, you may want to get in at the bottom and buy a couple ounces, see how you feel about it. Of course, I'm not your financial advisor, so I'm going to put a disclaimer on screen. We're not your financial advisor. Give legal or financial advice. Consult with your lawyer, attorney, accountant, whatever you need to do. But personally, I think it's pretty safe to buy a 1 ounce silver bar. You can't really go wrong. You're only spending about 25 to 30 bucks there, depending on what you buy. And you're going to get something that holds value over time and something that people definitely demand, and not just for monetary reasons, but for industrial reasons. Silver has become that important. So if you're interested in getting access to silver, J.M. Bullion has it. And I think we're going to see, going back to that chart, I think gold and silver are going to do okay during the summer. It's okay if they price fade a little bit. That's normal. Don't panic. But given the fundamentals and given the physical demand resulting from those fundamentals, I think that people are going to still continue to buy. So I don't think the price is going to fall down too much. And there are indicators telling us that probably it's not going to fall too much. We'll continue to follow that here on the channel. Stay tuned to J.M. Bullion for more. I will cover this for the channel as we move on. Thank you so much. This has been Rob Kientz with a special video for JM Bullion.